to BPA's first quarterly business review for fiscal year 2026. I'm Joel Scruggs, BPA's Chief Communications Officer. We appreciate you making time for this forum today. Before we get into the main content, I want to share a few reminders. Today's presentation is being recorded and we will be uploading it to our YouTube channel in about a week. You can find it under the QBR playlist. If you happen to experience any trouble with WebEx, you can find the slide deck for today's presentation on our website at bpa.gov/QBR. That's bpa.gov/QBR. One other note, WebEx offers accessibility tools, so please consider using these features as needed. BPA uses webinar mode in WebEx for public-facing meetings and workshops. And with this mode, all attendees are muted upon entry and the chat is disabled. However, we do welcome your question and engagement. You can submit a question at any time during the presentation and we will respond to it during the Q&A portion of the meeting. To submit a question, click the green circle with the white S at the bottom of your screen to launch the Slido Q&A box. And depending on your view, you may need to click the three little white dots in the bottom right corner of your screen to launch Slido. And then your questions will be sent to the BPA host. If you think of a question after today's presentation, you're always welcome to email us directly at communications@bpa.gov. We also kindly encourage you to include your company or organization name in your WebEx display name. Identifying yourself helps us all know who is participating in this forum, and you can edit your display name by right-clicking over your attendee name within the participant list. After this public meeting, participants will be emailed an invitation to take a brief survey. Sharing your feedback helps us shape the content to be better suited for our customers and stakeholders' needs, and lets us know if this meeting is still valuable to all of you. So please take a few minutes to complete the survey. This morning, Chief Administrative Officer Robin Furr is standing in for Administrator Hairston. Robin will share an overview of BPA's first quarter operational performance, and then our Executive Vice President and Chief Financial Officer, Tom McDonald, will summarize the agency's financial performance. Robin will then close out the main presentation with some updates on strategic initiatives. And following that, I will highlight upcoming public meetings, workshops, and processes. And then we'll wrap it up with any questions that you may have. And with that, I'll hand it over to Robin. Good morning, Robin.
Good morning. Thanks, Joel, and welcome everybody. John had a last-minute conflict, so I'm happy to be able to stand in for him and share BPA's first quarter results. Let's start with a look at our quarter one results on slide 6. Our safety performance fluctuated slightly compared to this time last year. A recent arc flash injury reminds us how essential it is to engage in safe work planning and execution. We are focused on strengthening our safety governance structure and risk escalation process. We're also introducing new safety metrics to help us recognize early indicators that we can act on to prevent and reduce incidents. Our transmission reliability metrics reflect the strong cold front and subsequent windstorm in mid-December that resulted in over 40 outages in BPA service territory. Real-time staff secured the system, and our transmission crews worked tirelessly through tough conditions to safely restore service to our customers. Despite the challenging event that caused us to miss 3 of the 4 reliability metrics for quarter one, we are recovering in quarter two with both the high and low voltage outage frequency targets now on track. And we're making significant improvements in the outage duration metrics as well. Federal hydropower ended quarter one with a forced outage factor of 9.5%, below our ceiling of 11%. This is a slight increase over the prior quarter, but still below the fiscal year 24 result of 9.8%. Over the period, 46 forced outages returned to service, but we saw return to service delays at the Grand Coulee units 4 and 19. And we continue to see impacts of long-term outages at the Dalles, Little Goose, and John Day. Staffing issues at the U.S. Army Corps of Engineers and Bureau of Reclamation are impacting this target, along with long lead times for materials. Until the hiring needs of our federal partners can be met, the federal system will likely continue to experience longer unit outages compared to the return to service times under previous staffing levels. Tom will walk through the finance metrics, but I'll make a quick note on agency net revenues, which is also below target. The last few years, we frequently saw lower than expected net revenues due to power purchase expenses driven by below average water. This year, however, power services net revenues are on track and lower transmission revenues are driving the missed target. While that's good news for power, there's a lot of uncertainty with so much of the year remaining. We are closely monitoring power's net revenues and the variables that may impact it, including the snowpack. From a hydropower operations standpoint, snowpack is well below average in much of Oregon and Washington, but it is in much better shape above Grand Coulee, especially in southeast British Columbia and parts of Idaho and Montana. We expect the geographic diversity of the federal hydropower system will benefit us as we move through the year. Now I'll hand it over to Tom to walk us through the details.
Thank you, Robin, and good morning. It is a pleasure to be with you all today for the first quarter business review. Robin just alluded to uncertainty. It's a good reminder that there is always significant uncertainty at this time of the year with respect to water conditions, market prices, and other variables. So our net revenue picture may change significantly, which may also impact some of our other financial KPIs. This year's agency net revenue targets align with the rate case forecasts. At Q1, we are forecasting agency net revenues of $488 million, $21 million below target. This is being driven by lower transmission results. We will also align our IPR cost expenditure target to the IPR cost forecast and rates, and transmission's target factors in the rate case settlement reduction of $48 million. Through Q1, our actuals appear to be on track, so we did not update this forecast at Q1. Our start of year capital target is $1.3 billion, which aligns to our agency asset plans. Through Q1, our actuals appear to be on track with this target, therefore we did not update capital forecasts at Q1. Our agency days cash on hand at Q1 is green. We forecast to end the year with 75 to 95 days cash. For comparison, we ended fiscal year 25 with 64 days cash on hand. While we're forecasting an improved liquidity position, it is still relatively low. Since 2020, we have averaged 140 days cash on hand at the end of the year. Our Q1 forecast reflects the low starting point for power services. The KPI for our debt to asset ratio, or leverage, measures progress against the goal to end the year at or below the prior year's result. The Q1 forecast for the agency debt to asset ratio is 79.5%, which is slightly below the agency's fiscal year 25 year-end result of 79.6%. While quantitatively this metric is on track, we have highlighted it as yellow given the very slim margin, less than 0.1%. At the end of the year, should this margin remain, the agency debt to asset ratio KPI will be reported green. For the transmission business line, the Q1 debt to asset ratio forecast is 75.2%, which is above its fiscal year 25 year-end result of 74.6%. Therefore, as of Q1, transmission is not on track to meet its leverage KPI for the year. The leverage KPI remains green for power as the Q1 forecast is below the fiscal year 25 year-end ratio. As agreed to in the BP26 rate case settlement, BPA will host workshops to discuss our leverage goals and other financial plan policies ahead of the BP29 rate case, and we plan to kick off the process this year. We'll provide more information about this public process soon. Our borrowing authority KPI is also green. This measure tracks our available U.S. Treasury borrowing authority over a rolling 20-year period. Borrowing authority is a critical access to capital tool. As we first noted at last year's Q3 QBR technical workshop, we are reporting this KPI as green, but this assumes the use of additional access to capital tools. The Transmission Capital Expansion Program necessitates the use of other capital financing tools to prevent borrowing authority constraints over the long-term 20-year horizon. We are actively pursuing financing under our lease purchase program this year and into the next 5 to 10 years. Turning to slide 9, we'll look at the details specific to the power business line. Overall, power is on track to exceed its net revenue target. Starting with the blue bar on the left, we have the net revenue target of $283 million. This matches Power's net revenue forecast in the rate case. Moving to the second bar, the non-IPR expense forecast is $233 million better than the KPI target. This is primarily due to changing assumptions since the rate case, namely the plan to serve Tier 2 load from the FCRPS or short-term market purchases rather than forward purchases. This means we zeroed out the forecast for Tier 2 purchases, and that was only partially offset by an increase in other power purchase expense. Moving on to the third bar, the IPR expense forecast is equal to target. In the fourth bar, Power's operating revenues are forecast to come in $210 million below target. This variance is primarily driven by lower PF revenues and reduced trading floor sales volume. The decrease in PF revenues resulted from operational changes, including updates to the tiered rates methodology billing determinants model, which we have made after the final proposal. Other drivers include lower net requirements than initially assumed in rate case. We've also seen a decline in trading floor sales as the warmer than average temperatures this fall increased the supply of power in the market and subsequently lowered market prices below forecast. These revenue reductions have been partially offset by the $40 million surcharge from fiscal year 25. Power's first quarter net revenue forecast is $306 million, which is $23 million above the KPI target. For the slice true-up, the Q1 forecast is a charge to customers of about $15 million. Additional details will be discussed at the QBR technical workshop this afternoon. Moving to transmission on slide 10, overall, transmission is not on track to meet its net revenue KPI target. Starting with the blue bar on the left, transmission's KPI target is $226 million, which matches expectations in the rate case. Moving to the second bar, transmission's IPR expense forecast is equal to target. Notably, IPR expense target incorporates a $48 million reduction resulting from the rate case settlement. This reduction signals BPA's intent to offset the revenue requirement reduction originally categorized as a non-IPR expense by leveraging cost management within our IPR expenses to the extent possible. In the third bar, transmission's non-IPR expense forecast is $10 million above the target. This is due to an increase in amortization expense and EIM entity scheduling coordinator settlement charges. Looking at the fourth bar, transmission's operating revenues are $34 million below the target. This is mainly driven by a decrease in point-to-point long-term revenues due to customers deferring transmission service requests. Looking at the bar on the far right, in total, transmission first quarter end-of-year net revenue forecast is $182 million, which is $44 million below the KPI target. Let's now turn to financial reserves on slide 11. We are now providing a forecast range for risks that picks up some volatility, but certainly not all potential volatility. The range shown here reflects the uncertainty around year-over-year changes in receivables and payables, which is extremely difficult to forecast, yet can have a large impact on end-of-year cash levels and therefore reserves results. I'll walk you through the forecast and then highlight some of the additional downside risks not included in the forecast. End-of-year agency financial reserves for risk are forecast to be between $607 million and $768 million, which equates to 75 to 95 days cash. For comparison, we ended fiscal year 25 with agency reserves for risk of $489 million and 64 days cash. From the business line perspective, we forecast Power to end the year with reserves for risk between $381 million and $442 million, up from $270 million at the end of fiscal year 25. At the low end of this forecast range, Power is a little above the lower threshold of the financial reserves policy. Transmission is forecast to end the year with reserves for risk between $227 million and $327 million, up from $220 million at the end of fiscal year 25. At the high end of this forecast range, transmission is a little below its reserves distribution clause threshold. But keep in mind that for the RDC to trigger, there's a two-tier test in which the agency must also be above its upper threshold. In a nutshell, we're seeing improved reserves for risk positions for both Power and transmission at Q1. However, it is important to highlight that significant uncertainty remains regarding the shape and timing of the runoff, and we still have 8 months remaining in the fiscal year. Both upside and downside potential can play out, but as you might imagine, we're a bit more concerned about the downside risks. Regarding these, a reminder that one standard deviation for power's hydrology risk is 125 million, and a single cold snap or heat wave event could result in unexpected costs of 300 million or more. Also, we face the risk of lost revenue depending on the outcome of litigation over the Columbia River System operations. We'll be watching reserves for risk closely over the remainder of the year. Finally, please tune in to the QBR technical workshop at which the team will explain the drivers behind the reserves for risk forecast. Turning to our capital program on slide 13, we will start with the bar on the left, which represents our fiscal year 26 target midpoint of $1,283 million. This target was established using our 2025 asset plans, which detailed the capital execution and major capital projects planned for fiscal year 26. The upper and lower dotted lines represent a range of 15% above and 10% below our target midpoint. This is what we consider the acceptable range of capital expenditures. As of Q1, there are no variances from the target compared to the forecast. Direct capital expenditures through the month of December are within 1% of the year-to-date target-shaped expectations. If you would like more details about how the target compares to rate case or specific Fed hydro or transmission metrics, tune in to the QBR technical workshop later today. As mentioned at the last QBR, BPA will initiate a review of our financial plan policies this year. This undertaking is designed to enhance risk mitigation strategies and ensure alignment with our strategic objectives, drawing valuable insights from our experience managing financial resilience through 3 consecutive poor water years. This concludes the financial report. Thank you all for your time. I will now turn it back over to Robin.
Thanks, Tom. Now we're going to turn to an update on some of our strategic initiatives. I want to start with the huge success of our Provider of Choice initiative. Following many years of hard work and collaboration across the region, BPA executed new long-term agreements to serve more than 130 public utility customers for nearly another 2 decades. The long-term certainty provided by these contracts will support regional economic stability and help ensure a more reliable and affordable power supply for our customers in the region for years to come. When the contracts are signed, our work is not over, and we will need your continued engagement in several upcoming public processes that are necessary for power sales to begin under the new agreements on October 1st, 2028. In March, we plan to kick off the contract high water mark process, which will define BPA's load obligations for the duration of the new contracts. Unlike existing contracts where high water marks are recalculated each rate period, Provider of Choice contracts fix the amount of priority firm Tier 1 power that BPA will offer each customer through 2044. We adopted this change to better support customer planning for non-federal resource development. When we conclude the contract high water mark calculations expected in May, we'll ask customers to make their elections for serving above high water mark load, whether they seek non-federal resources or purchase it from BPA at our Tier 2 rate. The contract high water mark process will give us critical information for our future resource needs assessments. Please stay tuned for more information about these processes and how to engage. In a related effort, the region is at a critical moment to prepare for the post-2028 implementation of the Residential Exchange Program. It's been 15 years since we've had to deliberate over the REP's implementation, thanks to the settlement agreement we've been operating under since 2012. BPA led settlement efforts from 2022 through 2025 with no regional consensus on a settlement framework. We have pivoted to focus our engagement on the processes necessary for Bonneville to implement the traditional REP. There are 3 work streams underway. In September, we began public workshops on the residential purchase and sale agreements, and then released the draft template and accepted comments through January 21st. We expect to publish the final RPSA template and record of decision next month. We've also been holding workshops on the average system cost methodology. Bonneville published a first draft of the methodology in December, held an informal comment window through January 21st, and then published an incremental draft last week. The draft ASCM is slated for public release and formal comment later this month. The third process component, developing a 7B2 methodology and legal interpretation, is expected to begin later this year. Joel will have more details to share about this process in his public engagement update. Moving on to some transmission news. We took a major step forward in transmission planning on January 30th. We released the Phase 1 results of BPA's first large generation interconnection cluster study. The GI cluster study includes 167 interconnection requests totaling 61 gigawatts of generation. That's more than twice the energy the region is expected to produce this entire year. The study found that adding all of this generation to the grid would require 59 transmission projects, including 44 new substations and more than 900 miles of new and upgraded transmission lines. Bonneville will walk through the study results at customer workshops in early February, arming developers with information to aid their decision-making. Developers will have 90 days to decide whether to move forward to the next phase of the cluster study or withdraw their requests from the queue. Ultimately, Bonneville will end up with a solid list of projects to build and financial commitments from the developers who are ready to interconnect. In addition, when we transitioned to the cluster study process, we were able to advance a large number of late-stage GI projects totaling 16 gigawatts of new gen. These interconnection requests were far enough along in the process to bypass the cluster study. We will begin integrating these projects this year at an expected rate of 1 to 1.5 gigawatts per year, with the full 16 gigawatts integrated by 2035. Many of these interconnections will leverage our existing projects, which leads me to BPA's grid expansion and reinforcement portfolio. Formally referred to as evolving grid projects, this portfolio represents a large scope of work to accommodate new generation and meet growing power needs. Our portfolio includes 23 projects that are estimated to come online between 2027 and 2035 at a preliminary cost of $6.3 billion. This is up from our previous estimate of $5 billion. Combined, these projects would add more than 6,000 megawatts of transmission capacity. We recently unveiled a new interactive project map to help you track these projects. The GIS-based map consolidates the project summaries and dashboard into one view. You can also add layers to see the location of system constraints, interconnection requests, solar and wind data, and more. You can find the map as well as a user guide on our grid expansion and reinforcement portfolio webpage. Staying on the topic of transmission planning, the Western Transmission Expansion Coalition reached its first major milestone on February 4th with the release of its 10-year Horizon study. BPA was a founding supporter of WestTech and continues to participate in the Western Power Pool-led effort to address the region's future transmission needs. The study identifies a host of projects to significantly increase transmission capacity across the West, enable substantial energy additions, and unlock interregional transfer capabilities. Notably, the 10-year study includes BPA's own portfolio of grid expansion and reinforcement projects. This provides further validation for BPA's studies and the projects we've identified to serve our customers. It also suggests that BPA's planned expansions are foundational to meeting future demand and resource integration needs within the Pacific Northwest and broader Western grid. In particular, WestTech's study identifies Bonneville's 500 kilovolt Lower Columbia to Nevada-Oregon border project as regionally beneficial, given its potential to reduce congestion and enable power delivery across regions. The 10-year portfolio gives us a credible, holistic look at the West's transmission needs and provides actionable projects and recommendations that the region can get moving on now. For BPA's part, we're advancing our expansion and reinforcement portfolio while also leading an effort to accelerate our grid investments. Our grid access transformation effort is designed to help us meet previously unheard of levels of demand. We've proposed significant changes to make this possible with a 6-point solution framework for both near-term and longer-term actions. Near-term actions are intended to clear bottlenecks, restore queue integrity, and stabilize planning. We are preparing to launch a new tariff modification process, TC27, to implement these near-term solutions. We are just wrapping up the pre-proceeding workshops, so please stay tuned for more details about the upcoming TC27 process. Longer-term reforms will enable proactive scenario-driven planning and reduce the time it takes to plan for, build, and energize infrastructure to accommodate our customers' needs. This will be an iterative process that we anticipate having fully integrated into our transmission planning and execution by 2030. All right, shifting gears, BPA continues to pursue our policy direction to participate in Markets Plus, the Southwest Power Pool's day-ahead market. Our policy direction is designed to maintain BPA's competitive position as a power provider. We plan to publish a draft decision to join in March 2026. We are currently working with an integrator to establish a timeline and a detailed plan to enable participation. Our planning work includes coordinating and building work streams to address potential impacts between Bonneville's Markets Plus participation and other agency initiatives, including Provider of Choice contract implementation and the Grid Access Transformation Program. We are also considering the impacts of our Markets Plus participation on other entities. Upon Bonneville's market entry, all resources, loads, and transmission located in Bonneville's balancing authority area would enter Markets Plus as well. BPA will share updates and provide opportunities for customers and other interested parties to engage in understanding these impacts. In a series of market readiness workshops, we are diving into market planning topics in more detail. The first workshop in early December laid out a tentative readiness schedule, including for the various processes like rate and tariff proceedings connected to market participation. The next workshop on March 12th will provide an update on key implementation planning activities. All Markets Plus participants must also take part in the Western Resource Adequacy Program, while BPA continues to participate in. BPA and 15 other program members have committed to moving forward with binding operations. RAP participants are working together to continue evolving the program and ensure compatibility with day-ahead market operations. RAP's first binding season is winter 2027-2028, which means the forward-showing data sharing timeframe associated with that binding season is just over a year away, March of 2027. BPA's continued participation in the non-binding data sharing seasons is preparing us for a successful launch. In other news, BPA said farewell to Scott Armentrout in January. His retirement leaves a vacancy at the head of our Environment, Fish, and Wildlife organization. While we seek a permanent replacement, Ben Zielinski will fill the Executive Vice President role on an acting basis. Ben has served as the Senior Policy Advisor for EF&W since 2018 and brings immense knowledge and leadership experience to the role. I'm confident he will provide steady and effective leadership during this transition. We're currently recruiting for 3 other senior leadership roles: Executive Vice President of Compliance, Audit, and Risk Management, Vice President of Bulk Marketing in Power Services, and Vice President of Engineering and Technical Services in Transmission. Each of these roles offers a unique opportunity to lead and make a lasting public impact. The vacancies for these positions close next week. While we're on the topic of fish and wildlife, I have a brief update on the ongoing litigation on Columbia River system operations. I can't comment on the litigation itself, so I will only speak to the process. In this case, the state of Oregon and a coalition of environmental and fishing organizations asked the court for a preliminary injunction that includes operational and other changes to federal dams on the main stem Columbia and Lower Snake Rivers. The case is being heard by the Federal District Court of Oregon, but the Ninth Circuit holds exclusive jurisdiction over cases concerning BPA's decisions. While Bonneville is not a party to the litigation, the preliminary injunction would greatly impact Bonneville's interests. Based on the lack of jurisdiction over BPA's decisions, the federal defendants filed a motion to dismiss the litigation. The motion to dismiss is based on lack of jurisdiction over Bonneville's decisions. The district court heard oral argument for both the preliminary injunction and motion to dismiss on February 6th. Afterward, the court asked the parties to confer and identify if there are areas of agreement. Plaintiffs must submit a new proposed order by February 20th, and the judge expects to issue a ruling February 23rd. BPA is coordinating with the Department of Justice and other agencies on next steps. We remain fully committed to working with our federal partners, regional tribes, and others to find solutions that support both fish and hydropower. Finally, I'd like to conclude with a workforce update. BPA continues to make hiring progress. Under our fiscal year 2026 staffing plan, we are targeting 150 recruitments per quarter. The highest priority positions are moving forward first with a focus on our most critical occupations. So far, the response to Bonneville's job opportunities has been overwhelming. Since we resumed hiring in September, we've received thousands of applications and made more than 100 selections. I'm thrilled to see how efficiently and strategically we are growing Bonneville's workforce, giving our teams the talent and resources they need to accomplish our goals. With that, I'll hand it back to you, Joel.
All right, thank you, Robin and Tom, for those updates. Now I'm going to highlight upcoming meetings, workshops, and processes, and then we'll close out with any questions that come in. As a reminder, you can find our customer and public meetings and workshops listed on the event calendar on bpa.gov. When you navigate to the Learn and Participate tab, here are a few meetings and workshops over the next several months that we'd like you to be aware of. Today is the last day of the Generator Interconnection Cluster Study Report meeting that started on Monday. The purpose of these meetings is to discuss the study results with interconnection customers. Today's agenda includes reviewing Lower Columbia 1, Lower Columbia 2, and Southeast Idaho. As mentioned a moment ago, we're hosting the QBR Technical Workshop this afternoon from 1 to 3 p.m. We encourage you to participate in this workshop where our finance team will provide additional information on some of the topics discussed today. There will also be agency updates about Fed Hydro and transmission capital metrics and updates about the Western Resource Adequacy Program. You can find more info about the QBR Technical Workshop on our QBR webpage at bpa.gov/QBR. We're also conducting a series of public workshops to develop the post-2028 Residential Exchange Program, Residential Purchase and Sale Agreement, and Average System Cost Methodology. We invite interested customers and stakeholders to join us for that next workshop on Friday, February 13th from 9 a.m. to noon. We're hosting 2 pre-proceeding workshops for TC27 next month on Tuesday, March 3rd and Wednesday, March 4th. The purpose is to continue the grid access transformation discussion on proposed changes to accelerate expansion of the Federal Columbia River transmission system. And after the workshops, we will conduct a TC27 tariff proceeding to implement the proposals. Customers and stakeholders are also encouraged to attend our Contract High Water Mark and Resource Support Services workshop on Wednesday, March 11th. This workshop will develop and review provider of choice resource support service contract provision for application of non-federal resources. On March 12th, we're hosting another day ahead market participation workshop, and then looking way out into April, we will host a provider of choice resource support services workshop on April 20th to develop and review contract provisions for application of non-federal resources. All right. So at the moment, we don't have any open public comment period, but we do expect to open 2 in the coming weeks. There's a comment period for the Residential Exchange Program's draft average system cost methodology, opening on February 20th and closing April 2nd. And then second public comment period we have coming up is an opportunity for stakeholders to comment on the draft day ahead market participation and those materials that we will present at the March 12th workshop, and the comment period will then open March 16th and close April 3rd. As a reminder, you can access the public comment portal on the comment page on our website at www.bpa.gov/comment at bpa.gov/comment. All right, that concludes our main presentation for today. Now we'll move into our brief Q&A segment. We've had a couple of questions come in. So Sydney Villanueva from Blue Sky Law asked, why isn't BPA listing the current available borrowing authority amount? And as at the close of FY26 Q1, the remaining borrowing authority amount is $6.5 billion. Please note that we continue to be hyper-focused on the remaining borrowing authority over the long term. And then Jeff Kugel at PNGC, his question is, in previous QBRs, BPA posted probability percentages of surcharges. Is BPA no longer doing that? And due to the uncertainty at this time of year, we're not sharing probabilities at Q1, and we will reassess it in future quarters. Do we have any other questions out there? Give folks a moment.
No hand raises and no other questions in the chat.
Okay. Well, if there aren't any more questions, we will conclude this morning's presentation. However, if you think of a question later or would prefer to put it in an email, you can email us at communications@bpa.gov. We also look forward to fielding more of your questions at the QBR Technical Workshop this afternoon, which begins at 1 p.m. And note that we'll be posting responses to the questions on the QBR webpage in the coming weeks, along with a recording of this presentation and a transcript of it. And the questions that were already submitted do not need to be resubmitted. Again, if you have a topic that you think warrants further discussion, you can always email us at communications@bpa.gov, and we will look into the best way to provide you that information. It would also greatly aid us if you do complete the post-event feedback survey. That will be emailed to today's attendee. And to wrap things up, we really appreciate you joining us for this forum. Our next quarterly business review will be on Thursday, May 14th, when we will be presenting the agency's second quarter performance results for FY 2026. In the meantime, stay safe and healthy. Thank you.